What we're going to talk today about is inventory. So if you don't have inventory, you can actually kind of tune out and turn off. But if you do have inventory in your business, this is a critical discussion. What we're going to talk about is inventory utilization and how it impacts your business, because there are about 3 areas that it's probably impacting your business. 1 is in profitability, 2 is in cash flow, and 3 is in the safety and security of your overall business. So let's talk about inventory utilization and what it is. The first thing that inventory utilization is, and the easiest way for me to describe it, is let's think about a glass. And let's think about if this glass had water in it. And this glass was filled up with water, say to, I don't know, 80% or 70%, something like that. Well, what we have here is we've paid for a full glass. Imagine you go down to your local restaurant and you buy a beer or a glass of wine and they fill up to 80%. Well, they didn't fill up the remainder of this 20% that in fact you purchased. Well, if you've got a warehouse and you're storing inventory, you're paying for all of that space. If you're only using 80% of it, you're still paying for 100% of it, and you're not using the other 20%. So let's talk real quickly about what you can do to first and foremost maximize profits with this kind of a situation. Because what you want to do ideally is you want to take that 80% and you want to increase it all the way to as close to 100% as you can possibly get. And how do you do that? Well, what if you went out and you went to your different suppliers and you bought in bulk? I said, guys, I know I can sell this stuff, so I'm going to buy more than I need and I'm going to fill up my warehouse. Would you give me a little discount if I bought in bulk? Most vendors will say yes. And if you can get a 5% discount, remember that 5% ends up straight on your bottom line. And if you're doing a $10 million business every single year, this 5% now all of a sudden is $500,000 in additional profit. That is a good thing. Pretty cool. Why else do we want to make sure that we are at 100% utilization? Because we also want to talk about something called inventory turns. How fast are you bringing the inventory in and then selling it out the door? If you're turning your inventory once a month, that's once every 30 days. If you can actually shrink your warehouse size, because remember, we were at 80% because we had this big glass, but what if we didn't need that big of a glass? What if we could actually turn this right here into 100%? Well, if we could do that, we would actually be turning our inventory faster. And if we kept an average of, let's say, $2 million of inventory on hand, and we could turn our inventory, let's just say 10% faster, we'd have $200,000 more cash in our bank account right now. And that's simply 3 days faster in a given month. What if we can do 6 days? What if we could do 9 days? What if we could do 12 days faster? So inventory utilization is directly attributable to the space that you have and how much of it you're using. You want to use all of it, and you want to either increase profits or increase the inventory turns to increase cash. Either one of those is going to make you a happier, healthier business.